first live trading day back since July the 13th when we stopped, and it was a down day today. We got in on a drawdown, and we are not going to be able to time these turning points perfectly, and that is not the goal. That is too much pressure, and so you'll get in on these drawdowns, and you can get further drawdown or you can get a turnaround. Last time we were in was back here on July the 6th. We started on a minus 2620 drawdown. We got in here. We had a first day was a losing day of July. Then we had a huge gain on July the 7th. This is the new portfolio, so it's not exact but similar. So we're trading a new setup now than we were in July. But so July, this number was a little bit larger loser. I think this number was a little bit smaller winner. And then we went through a give back period to break even. I had COVID and we just paused in July, and then we waited to start again in August with this new portfolio setup, and we have gone through. We almost hit the drawdown level here. We almost captured this. We did not, but we did get in based on this drawdown number for today's trade. And so when you add today's loss to this, minus 57.50 per E-mini, then you see we are about 19, actually almost 25K, not quite 25K. And so I'll put the final numbers in. I don't fill this in manually. I import the data, and so I'm going to do that later on. After all the markets close, I can get the final data, but we can see that the percentage of profitability was really hot. 75% of the last 12 days were winning days, and it's really dropped off here. And so we timed it to get in on a drawdown, and we are in on a drawdown, waiting for a turning point. We are managing our risk to worst case drawdown. And so let's go over the exact numbers here. So minus 57.50 per E-mini, and that comes out to about minus 2,300 in the 200K portfolio, because it's 40% of, we're trading 4 micros, and about minus 575 trading 1 micro, and this number will be about 24, and we're risking the 33 to 38K level because we started on a drawdown, and sometimes it comes down here and hits this drawdown level, worst case drawdown, and then it bounces. And so that's what we're risking. And so the additional risk from here forward is the additional risk at this point to 38K on an end of day basis is about 13K per E-mini. It's about 5K in the 200K portfolio, and it's about 1.3K in the 50K portfolio, the risk to worst case drawdown. So we're coming in here, we're getting in on a drawdown, we're managing our risk. Let's go over the trades on the day. Once again, we have a pattern that we are very familiar with. Gap down, continuation, and then no further selling in the afternoon. Mean reversion. It's still hard to trade this though. It's unusual for this pattern to exist for this long, and we've talked about how it's a function of liquidity and QT and QE and all that. So we had this gap down, continuation, and then reverse. It's prop and chop. We had prop and chop on Friday, gap down, propped up, rolled over, propped up, and I said yesterday we probably were due for a gap down. We got it, a gap down, and then propped up again. So you see this constant curling up at the end of the day, curling up on sell-offs, and a disallowance of selling, closing below. Rarely do you see closing below the morning lows. Still a tough pattern to trade, still unusual. So tick reversal, down on the day, got continuations, both down on the day. 60-minute breakout, tried to capture that reversal. It's just stopped out at the low. Tick wave just stopped out at this high point. One of those days where all the trades pretty much go against you. Momentum reversal, kind of around break even, up a little bit. VTNQ down on the day, and let's go look at the S&P strategies. Long counter trend strategies were profitable. Cobra CT3 was profitable. Tick fader was profitable, and 60-minute breakout short. Had a short trade that reversed to the long side, and the market sold off and was stopped out, and then momentum reversal right around break even. So 4 S&P strategies, this one was slightly up, and so those are the trades on the day. S&P 4 strategies, NASDAQ traded 1, 2, 3, 4, 5, 6, 7 strategies. And so tomorrow is CPI. Like I said, CPI has been, on CPI days, the market ends up going up on the day. So, you know, a sell-off in the pre-market and then a massive rally in the rally, gap down and then rally upwards right away at the open could potentially be a huge day. If there's a big up day, these strategies could capture that. But we'll see if it chops or if it rolls over. Potentially big down day. I don't know if CPI is hotter, it's a new high number, then they can't call peak inflation. No one's expecting that because gas prices have come off. So we'll see what the July CPI is at 7:30 a.m. as the market opens tomorrow at 8:30 a.m. And those are the trades for Tuesday, August the 9th, 2020.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.